if I purchased a vehicle in 2023 primarily for my business, is there a percentage I have to use it for business versus personal to deduct the amount I paid for? I paid cash. And how will that affect other depreciation and such for my business? I guess I'm asking what is the best way to deduct this? What do you think?
Well, uh, you're looking towards a deduction here for probably you're thinking about the depreciation here because you throw it in the question. So that would mean we'd probably need to purchase it in our business. Again, it does depend on how that business is taxed. We're talking about a C Corp, S Corp, partnership, or disregarded. Assuming that it's maybe a corporation, you're going to need a title in the name of that. And then you can do the depreciation, but there's a lot of problems with that. And to your question on the percentage of ownership, you really have to use it 50% or more for business to be able to do things like bonus depreciation or 179 deductions. So that's kind of leading you into the beginning of your question there. But ultimately, the better solution for our clients is often using just a standard mileage reimbursement and that or deduction in the case of a sole proprietorship.
Yeah, so here's what I see a lot of times. I see somebody that there's two kind of categories. There's the person that has one vehicle and they want to write it off as much as they can for business, and they don't know if they're going to keep doing that business or using that vehicle in that business. And what they'll do is they'll that first year they go to the accountant and the accountant says, buy something that's 6,000 pounds gross vehicle weight. We're going to write the whole thing off. You're going to get this big benefit. And first off, not quite true. You get to write off the amount of business use. So in order to use Section 179, which is this $1 million plus deduction in year one, you can't create losses. Or if you want to use 168K, which is bonus depreciation, you have to exceed 50% business use. If during the life of that vehicle you fall below 50%, you have recapture. So I want you to walk through this. Somebody talks you into, hey, let's buy the Land Rover or the G-Wagon at the end of the year. We'll do 100%, right? And they can do that. And you get this $200,000 deduction. Well, last year you wouldn't. You get 80% of that. So it's 2023, you're going to get 80%, and then you're going to depreciate the portion that you weren't able to use, the 20% you're going to spread out over 5 years. So you're going to get a pretty sizable deduction. The problem is if any time in the next 4 or 5 years you drop below 50%, that whole amount comes back and hits you as an ordinary tax.
Yep.
And it hits people. And then they always say, nobody told me. My accountant just told me to write it off. If you're buying a vehicle for the deduction, you're missing the point. But there's other ways to write off a vehicle, right?
Yep.
Sometimes you're not able to write off under 179 because it's not equipment. It's not over 6,000 pounds gross vehicle weight. It's an ordinary passenger car, in which case then you have limits. It's like 20 something $1,000 a year, right?
Mm-hmm.
That with bonus depreciation, you can write off a passenger vehicle. There's limits. But again, it's your percentage of business use. So I keep coming back to that because if you fall below that 50%, you have recapture that ordinary income of that deduction that you took. So if you're pushing it to meet that 50% threshold and you're doing the ha ha ha, I'm going to write it off, and then the following year you use it 10% business, you're going to be in for a really nasty surprise. And some of the accountants play fast and loose with it and they pretend or they fake the numbers. It's called tax evasion, and it'll get you in deep hot water if they catch you. What you want to do is track your business miles. And what we suggest, because when you put a property or a vehicle into a business, you're going to pay higher insurance because you're covering any employee that could possibly be driving it. It's commercial policy. You're subjecting yourself to the worry of having that recapture. If you keep it in your name, you're going to pay a little bit less, but you can reimburse 100%. 100% of those miles. Use an app like Mile IQ, and it'll track on GPS how many miles you're driving. And you could swipe left for business, right for personal, whatever it is. It might be backwards, but you're swiping one direction for one and one direction for the other. And it's easy to track. And that counts as a mileage log. You have to keep a mileage log, period, if you're trying to write things off with a vehicle for your business. So even if you bought a vehicle and you said, 100%, you better be prepared to show the IRS that you have a second vehicle that you use for your home. It doesn't mean that you can't do it. It just means that go in with your eyes open, guys. Somebody says, what about if you sold it from your business to yourself personally? Then can that work? If you sold, yeah, that potentially, if the business sold it to you, the business has they're going to recognize that as a taxable income.
You still have depreciation recapture.
Yeah, but it can reimburse you for the business usage. And there's two methods you could do it: the actual expense methodology, or you're doing the mileage reimbursement. I think the mileage right now is what?
67
cents a mile.
So 2024.
So let's just say that you're putting 20,000 miles a year and you're getting 67. I'm going to have to multiply that by 2. So that's 12
15,400.
No, it wouldn't be that. It would be 13,400.
13.
So $13,400 comes to you. You don't have to put it on your tax return. It's a deduction to the company. And you never have to worry about recapture. The punchline is, I see this over and over again. They never tell you about recapture. Hey, we'll write this whole thing off. Okay, but when you sell it, so you get the G-Wagon, you sell it for $100,000, 5 years later, you have $100,000 of income. You wrote off $100,000. If you had been writing off, let's just say you're putting 30,000 miles a year. Let me just get my handy dandy calculator out. Let's just say you're doing that. What's the 30,000 times 67? I suppose I should know that, but that's $20,000 a year. So let's just say it wrote off $20,000 a year. You have no recapture, and you could just keep writing it off, even if you kept that vehicle for 10 years, 20 years. So I tend to be on the side, I don't want surprises.
Right.
And I want to write things off when they're occurring. So I tend to be on the side of writing off. I tend to be on the side of doing the mileage reimbursement. Somebody says, so it's depreciation or mileage. You can't do both.
The mileage has a depreciation component to it. So correct, you cannot do both. So especially if the more you drive, the better your value on that mileage, standard mileage rate, 67 cents.
Yep. And you don't have, somebody says you don't have to recapture the mileage when you sell. No, you do not. That's why we tend to prefer. Everybody that I've ever read, like when I read the journals and stuff like that, and they're talking about cars and they're doing this analysis, they're always pretending that you're buying another vehicle when you sell yours and you're getting another big deduction. So I have a vehicle, I sell it, I have recapture, but I buy another vehicle and it offsets the recapture, right? So I didn't have to pay any gain. And I'm always like,
you're forced into it.
Yeah, you're literally forced into it. And I'm like, hey, why don't we let's just be real. My clients, on average, having looked at this, they're probably 20% business use. They can't use 179 and 168 for the most part. It's really all about the mileage reimbursement. And then it's easy. It's easy. Are you able to own the vehicle for 1 month as a business and still get the 60%? Yeah, actually, if you own it the last month of the year, even as long as you put it in service during that year, you could write that off. But then you have to exceed 50% every year for the life of that vehicle. So it's just a little one of those little things. They sucker punch you. And then here's the other side that we never see is if you are personally using that vehicle. So let's say that the business is paying for that vehicle and it gets to write off half. You have a taxable income component for the lease value of the vehicle that you're using. So you know how the company reimburses you 67 cents per mile? It's essentially the equivalent. You have to pay for your personal miles as ordinary income for the personal use of that vehicle. So you have a business vehicle. It's like this. If I gave Elliot, said, hey, here's keys to the G-Wagon.
The Anderson G-Wagon.
The IRS has a chart and they say value of the vehicle. Here's its lease value. In that case, it's probably about $48,000 a year. It was half used for business. So $24,000 would be taxable to this guy right here. Yep, with withholding and everything else.
As well as the insurance price that Toby talked about. It's really not a good deal. It works when if you are 100% using it for business, it's all you use it. You got your own separate car for your personal, or if it's like a delivery truck and that is what the business is about, it's very a specified vehicle for that type of business, then it's a little bit different.
Yeah, so if you're a realtor and you're using one vehicle to take your clients around, and you have a personal car at home, you're fine. Track the mileage on that business vehicle. That's all I'm saying. It's like, make sure you still got the Mile IQ on there. If it's 100%, you'll be able to win that. You'll say, this is the one I use to take my clients around in, and here's all the visits. It's actually pretty simple. You can actually set, like, hey, if I'm driving between my brokerage and my home and I have a home office, that can automatically, as soon as it sees that GPS and those coordinates, it says, business. So you don't have to mess around with it. And you could track it out that way. And then you have your personal, and you're not trying to write that one off. So you're okay. What usually trips people up is that they have one vehicle. If you're in construction, it's very common to have multiple vehicles. And if you have multiple vehicles, sometimes you're forced to go the actual expense method. If you have over 5, I think, then it's considered a fleet. What's the name of the app that tracks the mileage? It's Mile IQ. I have it on my phone.
Patty got the link.
Yeah, Patty just put it up there. It's easy. Just do that. It's so good for you. And again, it knows your trip. So if you have a common trip that you're constantly doing between offices, like, hey, I have 3 offices that I zip around to, and it'll automatically track them as business.
Hey guys, if you like this snippet of Tax Tuesday, then I invite you to click the link and actually subscribe to become a Tax Tuesday member. Every other week we do these live, and you too can ask your questions, and myself and my team will answer your questions on the next Tax Tuesday.